Hey guys, B Twice here. Today is Tuesday, July 27th. Forgot what day it was for a second. It was a really long day today at work, so didn't have a whole lot of time to watch all of the price action, but it was obviously a very interesting one. Obviously, since last week I was on my videos, I was talking about how we were going to have a drop coming as soon as we hit our fifth wave peak. Ultimately, we saw that today. So let's talk a little bit about what we saw here. So we're looking at SPY. Um, Basically, what I'm seeing is we had a five-wave move to the upside, so we obviously peaked for our one yesterday. And if you honestly look at the RSI, you could kind of see some warning signs even yesterday. We had a higher high with a lower high on the RSI. That's not a good sign. We started having some bearish divergence. I talked about yesterday how we might extend a little bit higher, but ultimately we were going to be dropping. So what am I seeing? So I tweeted at the beginning of the day that we could have been putting in a three-wave move down to right around the 438. And then the more I looked at it, the more I realized that it really looks like we're still in the first impulse down for an A. Ultimately, what I did do today was I was buying the dip on Chewy, on Airbnb, on Boeing. At one point, I think I extended my position a little bit more on Square, but it's pretty far out. But I was using today as a dip buy day, and even on SPY and QQQ. But I was buying mo- monthlies for a few months from now, and I already had a position. I was just adding to it, and my mind's at if we bottom today and I'm miscalculating our bottom, cool. If not, and we go lower, I don't care because I have more ammunition to buy the dip lower because I do still think we're going to go lower. But there was just some stocks I wanted to get into based upon where they were currently sitting, and I thought it was a great dip buy day. That I wanted to add to my long-term positions on SPY and QQQ. Now, with that being said, if we do go lower, which I think we're going to, and we get down to my boxes or my circles that I've drawn on these charts, obviously Elliott wave forecast calls them boxes. I just have these little circles on here. If we get down to my circles, I'm going to be buying weeklies off of those circles. So, with that being said, what are we seeing on SPY and where could we be going? So, when you take the retracement of the move up, we could be looking at 433 area to be a bottom or as low as 430. So, we want to make sure we're seeing clear three waves. Right now, it looks like we're having an impulse down for A, especially because we're going down after hours a little bit. It looks like tech might be pulling back a little bit after earnings. So we'll probably get a little bit more of a flush. We'll have a bounce to the upside, and then we're going to have one more flush, and then that's where we'll be looking at the short-term contracts. Right now, if you're a dip buyer, you want to be giving yourself some time because we more than likely probably a 95% chance there's going to be more downside from what we saw today. So be mindful of that, but we will keep watching this, and either tomorrow or maybe Thursday is going to be the day to enter for weeklies. I'm thinking maybe tomorrow afternoon will be the spot, or it'll be Thursday morning. Mondays and Thursdays are generally the pivot days in the market, so be mindful of that. We'll keep watching this, but we're about to have a spot where we can buy some weeklies. That's where you have the possibility to get a couple 100% returns on options. All right, so let's look at QQQ. All right, same thing with the RSI. We started having some bearish divergence. What am I seeing? So we had a massive drop off with QQQ day. I'm thinking that was the A. I didn't have time real quick to put the A here, but basically what I'm seeing is we had a five-wave move up for a one, which what I've been calling about all week. I did think we were going to extend a little bit higher this morning, but we ultimately didn't. We dropped, and I'm calling this our A bottom, and that we're popping up for B. So I do think there's going to be more downside. I think that dip is a buy, and then this is going to be the spot that we go long for weeklies once we see one more flush. So I will be tweeting about that. Generally, when these dip buys happen and you get your flush down to this level, then the rally off of it's going to happen so fast that you got to try to get into those weeklies quickly. So we'll keep watching this, but if we do get blessed with another dip from here, that dip, in my opinion, is a buy. And we should be heading up from here somewhere into the 380 range in the short term. All right. IWM. So IWM, I keep missing on this one. So it's been a pain. Now, with my position at IWM, I've been buying September calls, and the reason behind that is because I knew that there is a possibility that I could be wrong on my count. And I've gone back and forth between it. Ultimately, because we came down and we broke my invalidation, you'd have to go back and look at my video yesterday to see what my invalidation was. But we went down and we broke my invalidation. Let me get rid of this 38.2. That way you can actually see. We broke my invalidation. I was thinking that this was a 3 and we were pulling back for a 4 and we were going for a 5, and our 5 was somewhere in this 225 range. Ultimately, that's not what happened because we came down and broke invalidation. So what we have is we have a 1, we pull back for a 2, we had a 3, we had a 4, and we had a 5. So we had a 5 at this peak right here, meaning that we're in the process of pulling back for a wave 2. Let me go ahead and duplicate this and put it here so you guys can kind of see what's going on. Okay, so here's our wave two price target somewhere down here. So what am I seeing? Well, originally I saw an ABC move, and then ultimately we headed lower. So what I'm seeing is that we actually came down for a W, popped up for an X, and we're coming down for a Y. So our wave two price target is going to be somewhere. It could go as low as 214, 215, depending on how bad the market dips tomorrow, if it does dip. But I do think all dips are a buy on IWM. You just want to give yourself some time. This is going to be a wave two bottom. Mind you, the wave two bottom invalidation is 209. So this thing could go extremely low depending on how bad the market dips. But I do think IWM is going to lead the charge on the next rally to the bull side. So that's why I continue to accumulate and I continue to look for September positions, is because I want to make sure that I'm not going to lose if this thing does continue to dip. But with that being said, I do still see IWM dips as a buy. Okay. The last stock I really wanted to look at today was GRWG because somebody requested it yesterday, and I just don't have enough time to talk about the other stocks. So with that being said, what am I seeing? I still think that we had a bottom back here based upon my last video. I think the bottom still holds. But with that being said, our invalidation is going to be this 100% line. So let's go over what I saw. So originally I thought we were in a 1-2. I thought this was a 1-2, 1-2. But then we came down and we broke invalidation. So basically what that means is I have a 1, I have a 2. So there are 2s here. We popped up for a 3, we pulled back for a 4, we went up for a 5. And this isn't a higher degree 1. So before somebody comments and tells me that I can't have the 4 cross on the 1, go look at ElliottWaveForecast.com, do your research. You can have a wave 4 cross into wave 1 territory as long as it's not a higher degree wave 3. We're not in a wave 3, we're in a wave 1, so it is valid. So there you go. So with that being said, we popped up for a 5, which was our wave 1, and now we're looking for our bottom. So right now we're kind of hanging out somewhere in the 61.8 to 76.4% range. We're kind of just bouncing in between these retracements, these Fibonacci's. So right now the 76.4 is acting as support, the 61.8 is acting as resistance. I'm seeing this as our wave 2 bottom, this 35 range. I think we've popped up for a 1 and we're pulling back for a 2. We're also holding this downtrend line. So that's a positive thing. We're still holding support on this downtrend line, so I still do like GRWG in these upcoming months. So now let's talk about the negative. The negative is we did go really close to this invalidation point, the 33.82. If we pass 33.82, my position is busted, and then I have to evaluate if I just want to hold my shares long term or do I walk away if it's going to head significantly lower. If we break invalidation is when I'll actually evaluate my position and make that call. For now, I'm just going to hold. One other negative thing that I am seeing besides the fact that we came close to here is the fact that we are beneath this uptrend. This uptrend was back from when basically it IPO'd, and now we have to break above it. That's going to be strong resistance. It's going to be hard for us to get back above it. So that's the negative thing, but I do ultimately like this stock, and I do think that we are going to get back above it, but it's probably not going to rally until the small caps start to rally. So with all that being said, these are the only stocks I had time to look at today. But just to recap, I do think dips around these levels are a buy. We probably are going to get another big flush and people are going to be screaming the top is in. It's going to be a massive bear trap. In my opinion, I will be a dip buyer. I will continue to be a dip buyer. Use these opportunities to load up on stocks that you like. Boeing, Square, Airbnb, Etsy. Those are just some names I've covered in the last few weeks. Coinbase is one that looks like it's going to start rallying now that Bitcoin's bouncing back a little bit. So like you want to go look at the stocks you like and then look a few months out. Don't buy something expiring next Friday if it doesn't make any sense. Like if you think there's going to be another flush and you buy something next Friday, you're going to lose all your money. You need to be very, very certain the bottom is in to buy something for next Friday. So we're going to wait for one more flush and then we're going to buy something for next Friday. Right now, the dip that we're buying is we're buying 1 to 2 months out because then your position's not going to be blown up and you didn't have to worry about calling the bottom. You don't always have to be in the business of calling the bottom. Weeklies are for trying to scalp and swing trade. Monthlies are for, hey, I really like this position and I don't care if I catch the exact bottom. I just want to buy when there's blood in the streets. Well, guess what? Today there was blood in the streets and I made sure I got my Chewy position. I made sure I doubled down on my Airbnb's position. I made sure I got my Boeing position. You want to be mindful of that. Go into the trading day with a game plan and know what you're going to do based upon what you see. If the market rallies, it's probably not a good day to buy calls. It's a good day to buy puts. If the market's dying, it's probably a good day to buy calls unless you're extremely bearish and you think the top is in. So all right, guys, there you have it. That is my rant for today. If you like these videos, go ahead and hit a like and subscribe. That really helps. And then if you want to know my views on a daily basis, go ahead and subscribe to my Twitter. And then you can always just direct message me on there. All right, guys, if you like these videos, go ahead and hit a like and subscribe.